Public storage is one of the most popular REITs in the world, and it's pretty simple to understand why. First of all, investors see their properties all over the place, and this gives them a sense of familiarity with their real estate. Then secondly, it has a very strong balance sheet, which is a clear advantage in today's higher interest rate environment. Thirdly, self-storage properties have historically generated strong returns in all market environments, including even recessions. Fourth, this is one of the biggest REITs in the world with a $50 billion market cap. It's even included in the S&P 500, and all of that reduces risks. And then finally, PSA has a multi-decade track record of steady dividend growth and has massively outperformed the rest of the market, including even the S&P 500, since going public. So public storage has a very good reputation, but that did not save its stock from the REIT bear market that began in 2022. It took down every single REIT, including even public storage, which has dropped by about 35%, even as it grew its cash flow by over 20% over the same time period, and as such, its valuation multiple has now been essentially cut in half. Is this a good time to buy the stock while it's discounted, or should you sell before it drops even further? Hey everyone, this is Yusha. I run a small investment firm that specializes in REIT investing. In today's video, I'm going to give you 3 reasons why I'm not buying the stock of public storage. But before I get into it, I want to let you know that we just recently created a new YouTube channel to discuss all our favorite non-REIT investment opportunities. It's run by Samuel Smith, who I've been working with for over 5 years. He's VP at our company. I would strongly recommend you to go subscribe to the channel. I'll put a link to it in the description of this video. So here are 3 reasons why I'm not buying public storage despite its historically low valuation. The first reason is that I think that it's facing significant oversupply risk. What you need to understand here is that the pandemic led to a historic boom in demand for self-storage space because suddenly people were moving around a lot from one city to another. They also needed to make space for a home office, and so naturally they needed some extra storage space. Then a lot of the older generations passed behind, and unfortunately they then left a lot of stuff as well. And then fourth, a lot of people end up buying a lot of toys for the outdoors like jet skis, boats, RVs, and so on, and that also requires storage space. Moreover, this boom in demand happened right as there wasn't much new supply coming in the market, as it was very difficult to build during the worst days of the pandemic. And as a result, public storage and all the other storage REITs enjoyed very favorable supply-demand dynamics, which allowed them to significantly grow their occupancy rate and hike their rents as well. But unfortunately for them, this strong performance then attracted a lot of new competitors. Developers saw that self-storage was doing really well. They started building new properties all over the place, and now this supply is hitting the market even as the demand is also normalizing in the post-COVID world, because now suddenly people are returning back to the office, people are traveling more international, so they might be interested in selling some of the toys that they bought during the pandemic, so they don't need the storage space anymore. And then the vaccine is also doing its job at reducing COVID-related deaths, especially among the older people. And so now we have demand coming down, supply going up, and so it's a very unfavorable environment for self-storage owners. The management of public storage thinks that things will get better already in 2025, 2026, and they might be right, but what I fear is that if we go into a recession by then, self-storage might not be quite as resilient this time around because the rent levels are a lot higher these days as a percentage of the income of people. And so in the past, storage was quite resilient to recessions because it was such a small expense in the budget of people, so that it was easy to ignore it. But these days, the rents are way higher, and therefore I think that as people look to cut back on their budgets, their spending, they will also discontinue their storage leases. Finally, I fear that self-storage is going to suffer from 2 mega trends over the long run. The first one is that people are spending more and more money on experiences over things. And the second one is the growing sharing economy, which makes it a lot more efficient for people to rent things like RVs or boats instead of buying their own. And so if now you're able to rent an RV at a very affordable cost and it's convenient and efficient, you're less likely to buy your own, and so you need less storage space. I think that those are going to be particularly impactful to the American self-storage market because there's so much supply today. People are storing so much useless junk in the US compared to Europe, where there is a lot less supply. There is 10 times less storage space per capita in the UK than in the US, and 40 times less in continental Europe than in the US. Of course, there are also some cultural and geographic factors at play here that explain some of the differences, but still there is so much more supply in the US, and I think that these trends are going to have a negative impact on REITs like public storage. Hey, before I go into the second reason why I'm not buying public storage, can you please do me a huge favor and click the like button if you enjoy this type of content. I'm doing my best to bring you the good and the bad, so I'm not just cheerleading the REIT sector, I'm also showing you REITs that I'm not buying. If you think this is valuable to you, I'll really appreciate it if you show your support by liking the video. Thank you very much. And so the second reason why I'm not buying the stock is simply because I think that public storage is getting too big for its own good. I have previously explained that scale has advantages. It allows you to lower risk by having better portfolio diversification. It also gives you better access to capital, perhaps with better terms. It can also lead to economies of scale, which can boost your profitability. But past a certain point, economies of scale get turned into diseconomies of scale, and I think that public storage has reached this point. The problem of being as big as public storage with a market cap of over 50 billion is that new acquisitions don't really move the needle anymore. You really need to acquire a huge amount of new properties just to keep the ball rolling. It's the same problem that realty income is facing. I've discussed that in other videos. And so I think that this is going to slow down its future growth and reduce its future returns as well, compared to some of its close peers that are smaller in size. And then the third and final reason why I'm not buying public storage is simply because I think that there are better opportunities elsewhere, including even in its peer group. Its valuation has dropped very significantly. Its share price is down 35%, even as it grew its cash flow by 20-25%. I'm not denying that, but even today it's priced at just around 17 times FFO, which is not cheap, but it's not expensive either. You know, for a REIT that's suffering and might be facing a long-term oversupply, so not just the next couple of years, but even over the long run, as I discussed those trends earlier, 17 times FFO really isn't that cheap. There are some other REITs that invest in other property sectors that are priced a lot lower despite having better growth prospects. Even its peer group, there are REITs like Big Yellow Group that are priced at similar multiples despite having far better growth prospects as they focus on stronger markets in Europe rather than in the US. So for this reason, we are not buying public storage at High Yield Landlord, but if you want to access what we are buying instead, you can join us for a 2-week free trial. I'll put a link to it in the description of this video. Otherwise, let me know in the comment section below what you think of public storage. Do you disagree with me? What are some other REITs that you think might be better opportunities today? And also, please again, click the like button. That helps me a lot to grow the channel. I really appreciate it. Thank you so much and see you at my next one. Bye-bye.